Welcome everybody to the Benzinga after party. I'm here with Ryan Rozbiani. My name's Aaron Bree. We've got sorry about starting a little late tonight. We had some connectivity issues. I made an audible, but I'm here at the gym now. I hope I don't get kicked out of the room. Um, Ryan, how we doing tonight?
I'm doing well, man. How are you? How's everything? Apologies, everyone. We started a bit late. Technical difficulties. All the good ones start with a bit of technical difficulties, so it's going to be a good one tonight. We're going to have some fun.
Yes, sir. I see you got the SPY pulled up. Take us through that. What are you seeing?
Sure. I just want to start with a quick discussion. If we could just do a side by side with you and me real quick. I just want to talk to the people real quick about everything going on first before we jump into SPY. So it's been a really, really, really rough couple of weeks now. We're on week 3 right now. It's been pretty red. We've been dealing with a lot of wildness with the market. The market is something that's multivariable, as everyone knows. And this is one of those time periods that truly, truly, truly tests a trader. It's not the green days. The green days, anyone can come in. You can grab a stock. 2 days later, everything is looking good, and we're just rocking and rolling. Did I disconnect? I think give me 1 second. I think my camera disconnected. Let me just. Am I back? Aaron, can you see me? Can you hear me?
Yep, you're on.
I'm on. You can see me. All right,
Yep.
Sorry about that. We're riddled with technical difficulties tonight, man. But it's totally fine. So the point I was trying to make was, look, there are times when everything is going well and we're all riding this out and we're riding this train up. The bull market's roaring. We're making money. But it's times like this when the market's red and we are down in the dirt. The P&Ls aren't looking hot. The market's red. The accounts are red. This is when real traders are made. These times shake out traders. A lot of traders will be exiting the market these past couple weeks because we don't know when this will end. I'm hopeful for it to be ending very soon with the stimulus checks coming, everything going on. But this is when your DD and stuff starts paying off. So, for example, you've got a stock in your account, like you bought a Gevo, a CBAT, a DPW, I don't know, a Palantir, something like that. If you did your DD, if you sat down, you analyzed the company, the management team, everything behind it, and everything made sense, and you hit buy on that stock, and you went in there roaring and ready to go, you should be confident now. This is your stock. The company hasn't changed. The market has just changed. The market's just going towards red. We dealt with the short squeezes back with GameStop and AMC. When those go up, we saw that SPY comes down naturally. Money influxes and moves. That's natural. It happens. That's temporary. You give time for the market to heal. Remember that amazing feeling we all had on Monday? The market was green. We were having fun. Everyone was happy. Remember that feeling is going to come back very soon. These things don't last. These days are what make you a good trader. This is why it's always said to have some dry powder or cash on hand so you can average down on days like this. This is why a lot of traders will tell you, always do your DD, because when you buy into a stock and you've done your DD in conviction, days like today shouldn't bother you. The company hasn't changed. Like if a stock is down today and it's red, the company didn't just drastically change. It's not just your stock. Look across the market. It's red, baby. SPY's red. Can we just show SPY real quick? I want to show everyone something.
Yeah,
this is a
course.
powerful image. I try to show everyone when the markets are a little bit wild. This is the first thing I kind of screenshot and kind of want to share with everyone. So real quick, this is the S&P 500 chart. If you look here, if you remember, a lot of people keep saying this is the same thing that happened last March. We're going to crash. I don't think so. I hope not. Again, I can't see the future, but I don't think so. Look, your SPY took a dip. There's a lot of manipulation in the market that's been admittedly shown on CNBC, stuff like that. But I want you to take a look throughout the history of SPY, which is the S&P 500, which are the biggest 500 companies in the world, not in the world, I'm sorry, in their US markets. You can see here, every time we've had a bit of a dip and a lull, the market has always recovered. And as you see, as I'm dragging my mouse back into where we are now, look at these big dips. They've all recovered. Even the massive big one, the COVID one, where everyone thought we were going back into the Great Depression, recovered and beat this. And right now we are here. We're here at another lull. We're here at another bottom of a peak, bottom of a valley. Can it go lower? Sure. Some people are saying we can go see 368. But look, we will always recover out of this. This is why, again, I'm going to say this one more time. I don't want to get too repetitive. This is why you do your DD as a trader. So you can find the stock that fits you, fits your portfolio, you have conviction, and you can buy it with confidence and always be prepared for these days. And sometimes this is another thing. If days like today shake you and you're a new trader or even an advanced trader or everything that's going on, step away from the terminal. Today's the day you go catch up on your favorite TV show. You go hang out with mom. You go make some food. You meal prep. You do something different. You get your head out of it because you know you're a good trader. If you're still in this game and you're doing this and you're following all the rules and you've done all the research and you can, these red days don't define you. These red days make you stronger in conviction. I used to get shaken up by red days a lot. They still bothered me. I had to deal with the March 2020 dip. As you saw, that was one of the most volatile, crazy markets that ever happened in history. I can even say, I don't know, I can't say in history, but because we had the Great Depression and all that. But it was a very shaky and scary time. And we rode that out and we came back roaring. And I think the stimulus vote checks are coming. They're going to inject free money into the market again. That always helps. That'll help bring back the Bitcoin will come up. I did a whole video and analysis on that as the value of money goes down, the value of Bitcoin goes up. So that helps out a lot of the Bitcoin stocks. The green energy bill is coming. That will help all the energy stocks that everyone's in. Then you have the cannabis bill. So all of our favorite cannabis stocks, the sundials, the ACBs, the Tilleries, those will start rolling back. So the whole point of this is this. Don't be shaken by days like today, weeks like that we've been in. Rest up, ease up, use this time to learn, recover, and get in there. And don't let this red market shake you up because trading is a beautiful art form. And the more you deal with this, the better you will get. And again, I told Aaron this. I was like, I want to open up the show with this because there's so many people that are messaging me, so many people that have been shaken by this, and it breaks my heart to see traders walk away from trading because it's something that I love so much and it's helped me a lot so much get financial ease and mental ease, and it's truly an art form that I think if you put in the time to it, you will learn to love these red days and get your cheap stocks. Who doesn't like a sale?
Right, and that's like one thing you mentioned was having dry powder, as you called it, or cash on the side. And that's the thing is like you said, if you've done your DD on the stocks and you like the company, and now there's a sale on that company, you can buy into it at a lower price, and you can change your price point, and that's a good strategy to be able to bounce back from a couple red days in a row.
Right, exactly. So your stock might be down to like a stock that I really, really like. This isn't a pump. I'm not a financial advisor. Don't listen to me. It was spoken about on the amazing interview on this network with Kathy Wood. So if you haven't seen that, please go watch that to get inspired by. She's managing millions, if not billions of dollars. I'm blanking on the assets under management that they have there, but they're dealing with other people's money, which is even higher stress levels. And she's confident. If she's confident, I'm confident. There's a lot of other fund managers out there that are very confident things will recover. A question that came into the chat from D Nice is, how can we play SPY? So you can play SPY with calls and puts. Again, this is if you're a very, very good options trader. I recommend this. If you're a new novice trader, options are very dangerous for you if you don't know how they work. You don't know how time decays. You don't know the Greeks. Do your research. Again, take this time to learn. So when the next round of red comes, because it always comes, you'll be ready to buy SPY puts when we're deep in the green so that you can make some money during this time. But don't go out and willy-nilly buy like a $368 SPY put or whatever for 2 weeks from now. And who knows, we could end up in the super green and you lose out on a lot of money because those puts are pretty expensive.
Right. So which was the stock that you bought today that Kathy Wood mentioned?
I bought NNDM. I actually doubled my position on NNDM. I've been big on that stock. They do 3D printing. Her conviction on it, of course. I bought into the stock when she had bought into the stock. I like to follow a lot of Kathy's plays because she's brilliant. I've been doing a lot of DD myself, combing through the massive investor presentation that they have. The thing that attracts me to it is I like a lot of Israeli tech companies. Some of the most brilliant minds come out of there. I've had the pleasure of talking with a lot of some of those brilliant minds that actually go to these secret innovation conferences that happen there. And I think NNDM is in a beautiful position because what they do is you can actually 3D print your circuits right there. So you no longer have to send these off to third-party places like they were saying with the Army and military contracts that you have there. This is proprietary, really, really secret information in these chips. So you can just print it right there in-house. You don't have to actually go out there and send it to third-party people to print it, which can result in leaks and things can start getting ugly and hairy. So this is why I like NNDM. 3D printing is one of the hot sectors that we know is going to start blooming. NNDM has been doing it for a while. They've got $1.5 billion on their balance sheet. And I watched a recent interview with their CEO, who's someone who's really, really brilliant. And they're actually looking to purchase one, if not two companies that are in the same sector that are doing some really, really good things with that 1.5 billion. So while a lot of us have been dealing with a lot of their offerings, those offerings should come to fruition and result in some really, really great things.
Yeah, I actually want to tell you, I opened a position on the same stock, on the same company today too, and I saw you tweeting about
Nice.
it, and that was one of the reasons that brought me into it. But again, we're not financial advisors. We're just here for educational purposes. We're not trying to, do anything. But I see a good question in the comments saying, what
Sure.
signals do you look for to expect an upturn is coming?
Okay, so as mentioned, like in the really beginning of the stream, the market works on many, many variables. It's not just the indicators that we deal with on the market. We're not just looking at the MACD on SPY, because, like, for example, the small cap stocks that we play, like the penny stocks that a lot of us play, SPY, a lot of people even say die, SPY, die. They want SPY to go down because money starts flowing into those small caps. So indicators I like to look for a market that turns green is you first want to look for what sectors are hot and what catalysts are coming up for those sectors. So two sectors that I mentioned were energy and cannabis. And of course, you've got the really, really tiny small one, which there aren't too many stocks in right now. It's the COVID thing, because in the stimulus bill, we've got money for energy and we've got money for COVID stocks. So there's a lot of stocks out there. I don't want to mention them by name. I don't want to be accused of pumping. You can go out there and do your own research. They're really, really easy to find. Those for the COVID ones. For energy, there's some money in there for that. Again, you've got a lot of companies out there that deal with energy. FinViz is a great tool to kind of search up sectors. I talk a lot about these stocks. So you look for indicators like, okay, there's going to be $1.9 trillion going into the market for these two sectors right now. Okay, cool. So money's going into these sectors. So the big hedge funds and the big algorithms and us retail investors are going to go out there and start seeing these stocks move. Volume will come into these stocks and we'll see them start going up. So once these stocks are cheap right now, we can start buying them and kind of hounding them for when those catalysts come, because that's something we know. Next is the third sector that I mentioned, which is cannabis. Cannabis is going to be one of the hot topics of 2021. New Jersey just legalized. We know the Senate and the whole administration, the government has been pushing for mass decriminalization, which means those companies like ACB, Tillery, Sundial, those are ones, there's just like only 5 or 7 of them left now because there's been so many mergers and acquisitions. Those will get hot because that's how it goes. Even the thought and mention of this bill makes that sector hot. If you remember, in early January, Sundial went to like $4 just off of the mention of Chuck Schumer saying, hey, we wanted fast track cannabis bill. So you look for these things in the news cycle around the government bills coming out. That's one thing that I look at. And the overall market coming back up. The reason that I'm confident is just because with the stimulus check coming, you've got $1,400 coming into the market. Unemployment gets extended until, I believe, the end of September, which is big. One of the big factors that you see a lot of shakiness right now is because unemployment ends, I believe, on March 18th. If that goes, the economy will be in a bit of disarray, which means the markets get affected as well. So these are the little tiny things that I look at here and there, micro little ideas that pop out. One of the best tools that I like to use is I watch the press briefings that the White House does. So a stock that you guys might have seen me play a lot is RVP for syringes. How did I know that that company was going to get money for syringes? They got a $54 million contract. Well, every time that the press secretary, whose name I'm blanking on, would talk about money for COVID, the first thing that they would say is, for these syringes, we have a syringe shortage. We're looking to get money for syringes. I looked up RVP. I'd played it 2 times already. I knew that they had government contracts. I knew government companies give, when you have a contract with the government, they keep going back there because they don't want to deal with the paperwork. So RVP, for example, is a company that I'm looking to buying. Now, again, not a financial advisor, not saying play that right now. But that's just an example of how, from that one press briefing, I spent 20 minutes watching that, did a little bit of research, found some data. You start connecting the dots. That goes back to the core essence of this stream is you do your DD, you find the good stock, you make some money on the way up.
Right. And the other core essence of this stream is, finding ways to, de-stress from the market without fully, getting that cold feet of saying you don't want to do this. I mean, because once you do that, then you kind of lose in a way. You got to be able to have that, resilience, and then you'll bounce back when the market does. And that's really the bottom line.
Yeah, it bounces back tonight. What
Yeah.
are you
Are
gonna?
you going to be there? Are you going to be there when it does or not? And that's the bottom line,
Exactly.
you know?
Someone's put a really, really great comment. It said the stock market's like a roller coaster. You only get hurt if you get off. Now, look, I get it. If a stock goes too low, you need to protect your capital. You need to cut your position. Please always do what's best for you. The whole diamond hands thing. Don't do that if it's going to destroy you. Again, that goes back to the very first pillar of investing is don't invest money you can't afford to lose. If you follow these very, very, very basic rules, days like today shouldn't shake you. And look, there's a lot of outlets out there. Go watch a cooking show. Go watch a TV show. Go listen to some music. Go hang out with friends. I know it's COVID. You can't really do that much. Get on a Zoom call or do something. De-stress yourself on days like today because the market will bounce back. It always bounces back. I showed you, SPY. The proof is in the data. If you follow the data, we're going to be fine. And maybe it comes back tomorrow. Maybe it comes back 2 weeks from now. It's just a matter of, I know I'm going to fight to be there. Both psychologically, trading is a psychological game. I'll be fighting psychologically to be there. And financially, I'll be looking to see what I can do along the way. What can I catch? I think NNDM, I think I got it for a steal today. I think in 2 to 3 to 4 months, that stock is going to be beautiful and bloomed. So that's just one example of how you can use these cheap prices. Because look, one day you'll be looking back 4 or 5 years from now, once the market is blooming and everything's going beautiful, and you're like, man, Palantir was $25. It's $100 now. That's just an example, but just look into the world like that. Again, you just got to, investing is a ride. Enjoy the ride, enjoy the journey, and just rock and roll with that. I promise you'll be fine if you just follow some basic simple rules.
Right. And one of those simple rules, at least for me, is I always do like to keep a little bit of cash on the side.
That's very, very important.
Let's bring our guest on. Andrew, you ready?
Andrew's here.
Oh, let's go. Let's bring him on. He's probably wanting to chime into part of that conversation, huh?
Bum Schiavone, let's do this.
Am I in? Hey, everybody! Thanks for that cheery welcome. Hey, the market's red. You guys all lost your money, but hang out with your mom. Can you imagine hanging out with your mom when you're down so low? You're like, "Hey, mom, good to see you." And she's like, "You want to order pizza?" And you're like, "Can you pay for it?" Because
yeah, man, that's what you go to your mom for. That's when the cards are down, you go to mom. You get the chicken noodle soup, you get the pizza, you get the nice hug. What do you get? Where else, man? You can't go to the bar and drink your fear away anymore. Especially us. We're in New York City. Everything's closed.
Hey, look at my mask though. You know, it's a red day.
It's all good.
It's all good though. You know, we'll get through it. We'll get through it. Andrew, why don't you introduce yourself to our audience a little bit? The Benzinga audience.
Hey, Benzinga, what's up, everybody? I'm Andrew Schiavone. I'm a comedian in New York City. I've known Ryan a long time. I just met this producer. I apparently his gym is a grandmother's house, but
it looks like one, don't it? Yeah.
Yeah. What kind of gym is that?
Well, I'm Aaron. It's nice to meet you, Andrew.
Yeah, I've been trading. I do options trading, so I don't sleep a lot. So I do that as well. I talk to Ryan about it sometimes, but
I trade options as well. I actually bought call options on NNDM. And again, I don't know. I'm not saying that's like a good play. Someone asked if that's a good earnings play. I legitimately treat my options Robinhood account like it's like I might as well be going to the casino. So I do not listen to anything I say. Like I'm doing deep DD into this stuff. I heard Kathy talking about it today, and that was my DD.
Yeah, Kathy talks a lot about a lot of stocks, though. I mean, she also bought PayPal last week, and it's crumbling. I'm sorry, Square. But anyways, yeah, the options are brutal. Casinos are fun, though.
Yeah, you get free drinks.
At least you get a free drink while you're losing.
That's what someone told me that. That's a good one.
A buffet ticket or something.
Yeah, I don't look at a slot machine and immediately get sad, like when I look at my Robinhood. But yeah, options, man, I was up so big last month and I was like, I'm invincible. And that's when they crash the market. When you think you put your extra money in because you're like, I can't have this sitting around. It's gonna, and then that's when they crash it and they keep crashing it. And that's when you buy puts, is like when it's so high that you can't believe it.
I don't know who they are, but
I
hate they. We should find they and make them stop doing that.
Yeah, the MMs or whoever they are, they know who they are, but
yeah, they're out there crashing the market. Whoever they
people
are,
from selling.
Yeah, and then I mean, in reality, it was the 10-year Treasury shot up, and these tech companies can't borrow anymore. And then
wait, Ryan, can you? I know I don't see it in that. Do you still have your Benzinga Pro up of SPY? Can we look at it again?
Sure, I can pull it. I have it up. I just got a screenshot.
Sorry, I wasn't trying to mean to cut you off, Andrew. What were you?
No problem.
Oh, it's something boring. Pull it up. Everyone, look at what SPY was in November, and then you'll feel better.
That's
was
what I'm saying. People are calling this a crash, and it's like when you look at SPY, when you look at over the like, is it a crash? I don't know if it's a
This right here, I don't think they can see this down here. This is a
that's a
crash.
crash. That's
This is a
COVID.
crash. This let's go a few years back to 2009 and 2016. This is a crash. This is a crash.
People are treating like a 1% down day in the market like it's
Come on, this is like these little mini down move. These are the five. This is when you want to load your IRA account. These are IRA days, man. You gotta use these. Look, boom, back up, boom, back up. Come on, like last November was brutal. Like November onward was great, but before November, as we were going into the elections, that was brutal. Look at this.
I look how much it dipped. Yeah.
Yeah, look, boom, down and then right back up because that's how the market works. You think these millionaires and billionaires and well, we got trillionaires now too. These trillionaires are just going to stop investing and make no. The money comes back into the game,
and there'll always be flows. It'll keep flowing from different companies, different industries. You know, so when there are these big downturns, there's also like outflows from certain industries and companies into other ones, and so there's always good buying opportunities.
So Andrew, I know you do the podcast Panic Attacking with Steve Rogers. So how do you suggest handling a day like this? Because I know you guys deal with a lot of this stuff.
So there was a couple episodes where we have a therapist on our podcast. I talked to the therapist about the stocks, and that was like an ongoing thing, especially during the tech crash at the end of this summer. Does anyone remember that when all the tech crashed for no reason? I lost so much money. I was down to $300 out of 10,000 I put in. And I was able to make it all back. So don't lose hope, everybody.
See, he was able to make it all back.
I mean, I turned $300 into $20,000.
Yeah, try to do that at a
and this guy loves Hyliion the most. That's all he talks about. And he just bought it because that guy likes Taco Bell.
Yeah, but the therapist said, like, don't worry. There's always going to be situations in your life where you lose money, and you can't let that depress you because you're going to make it back. And you know, when you were up, you didn't even have that money, so you can't even be depressed about it. And she talked me off a ledge a couple times, but that's the podcast. Being anxious about it, I couldn't sleep for many months. I haven't slept well this whole year, actually.
Andrew, goddamn, we gotta get you back to doing shows or something. Get you off the stock market.
And that's what it was when comedy got canceled. I turned to the options trading as to get the buzz back, but.
Yeah, because I know you from last week we had H Foley on, and the week before we had Kevin Ryan on. So I know you guys from the Center City Comedy Podcast, and I have had the pleasure of watching you kind of bloom as a comedian from back in your Center City days. So there was on the Center City Comedy Podcast, Andrew was a very brand new comedian, and then they would sing the Bum Bum Schiavone song. Derek Gaines would sing that. So I love that song. That song's a fun throwback for me. So Andrew is actually really, really hilarious. I found him really hilarious back then. He's gotten even better now. And with this podcast, I have the pleasure of actually listening to it from time to time, and I love it, man. It helps me calm down. I have a ton of laughs. You two guys are hilarious. So I was like, I think it'd be a great fit. Plus, you do the TikTok videos for the stocks, so I thought you'd be a great fit here.
Yeah, thanks, Ryan. Thanks so much for those kind words. The podcast keeps my sanity, and I talk about the stocks on the podcast, but I don't give tickers away, but I just talk about the stress. And on TikTok, I've been blowing up by just making TikToks about how bad I've been losing, and people are like, wow, this is refreshing.
Because misery loves company. They want to be like, all right, this guy, this famous dude is losing money too. It's okay. We can lose money too.
And they say on the videos that no one's really transparent. They're like, I'm making a lot. So it's refreshing to see somebody say, I'm really down. And I am really down right now. So
buddy,
I thought the dip was yesterday. I thought the dip was last week. It just kept crashing.
That's what a lot of people keep saying. It's like the dip keeps on dipping. And again, the dip will reverse itself and we'll be completely fine. So Andrew, what have you been doing besides the stock stuff during this COVID thing? I think it looks like a rip-off Peloton bike behind you there. What are you doing during this time to kind of keep busy?
A rip-off one? What if it's a real one?
I don't know. I was just making a joke, man.
He knows me really well. I would never shell out the money for a Peloton. That stock crashed, by the way, too. But
he'd glue a Samsung tablet to a stationary bike and call that a Peloton.
Yeah, I would. And that's what I got my girlfriend, too. She was like, I want a Peloton. I'm like, are you kidding me? I'm like, you're going to get this Japanese knockoff I got on Amazon. I got the Samsung to her iPhone.
I saw one at Sam's Club the other day that had it looked exactly like a Peloton, and it was like $800. And I thought in my head, no wonder this stock is going down, you know?
And that's just for the bike. Then you got to pay for the membership too. One funny thing about Peloton is my dad's debit card. Someone I guess got a hold of his debit card number and charged it to a Peloton for $0. And I don't know why you would ever steal.
So your dad bought a Peloton. He just doesn't get to ride it.
No, he never got the Peloton. We got the money back, but someone got a hold of his card number somehow and charged $0 to Peloton as a test. I guess that was the weirdest thing ever. I was like, what the heck is going on? Peloton puts.
So
Did your dad get a call about his warranty and he believed it?
No,
my car warranty expired.
Here, those calls are. I get them on my work phone too. I don't know how they got that number. The work phone number was issued last March. I don't know where they got that number.
They're just calling every number, hoping for an old person to pick up and go, "My car, okay."
It's terrible.
My Peloton.
We're in New York, man. This is the wrong state to call about cars. Who has a car in New York?
Yeah. I do, but that's unfortunate. But
I know it's like the old Sam Rubinoff joke. You can't have a car in New York City.
He also said marriage is like a car. Oh, that was a different comedian. You really got to put the work in. Producer, what were you saying? You were asking me something.
Oh, I was gonna ask. It's what was I gonna ask? Oh, you said you're in New York now. Are you from there originally?
No, I'm from Virginia, like Washington D.C. area. So this is
nice, like Fairfax area or something.
Yeah, exactly. So living in here was like traumatizing. I lived in the middle of Queens, probably where Ryan lives now. I lived in like a Soviet development from there was no decorations. It was just walls. It looked like a prison. And that was
not as nice as my grandma's house gym.
There's no wallpaper. It didn't look like Ryan's apartment. It didn't have a shower curtain in his bedroom, but
that's a curtain, not a shower curtain.
It was so depressing when I first moved here. So I luckily found a bunch of comedians to hang out with, which is how I met Ryan.
Not that hard to do in New York City, right?
No, yeah, they're growing trees up here.
Everyone does comedy.
yeah, your roommate, your landlord, your janitor, they all do stand up on the weekends.
Oh man. So Andrew, so with the TikTok stuff, so you said you've been having a lot of you've had a lot of success with the TikTok stuff. Like, how do you deal? Do you see these people posting the weird stuff in the comments? How do they react? Like, are they all like pleasant on TikTok? That's one of the platforms I have never ventured to and plan not to venture to. I don't want to end up with any weird stuff on my phone.
Oh, don't worry about that, Ryan. I don't think there's weird stuff on your phone. But I would suggest going on there. Stock Talk is hot. They call it Stock Talk, kids.
Stock Talk. Yeah.
But yeah, so I posted a video when GME was at $400. I posted, don't buy AMC and don't buy GME anymore because they're not going to let it go up. I posted a video of this, and then the next day it all crashed. And
oh boy, they must have loved you.
Yeah, before it crashed, all the people in the comments said, "This guy is a hedge fund employee. He's an insider." I was like, watch any of my videos, see my apartment.
Yeah.
Show me your Peloton.
And why would the hedge fund just send weirdos out to TikTok to spread disinformation? That's like Soviet level strategy. But
comedian and podcast host in New York City is like on the whole other side of the spectrum than insider hedge fund manager.
Right. Yeah. Two different worlds. Hedge fund people aren't really funny. But and then on Dogecoin, when that blew up, I said, don't buy it anymore. It's at its peak. And then the comment said, well, I made $300 today. And I said, because it's at its peak, everybody. And then everyone
you bought 6 months ago, you loser.
And then people said, I'm going to check back on this in 2 weeks and laugh. And then literally the next day, Dogecoin crashed. And I was like, what's up now, everybody? I replied to every comment.
Dude, that happens to me all the time too. I got trolls that reply to my tweets, and then the thing that they have, there's this bot called @RemindMe, and then they're like, all right, @RemindMe in 2 months that this idiot is going to be wrong about this. Like, I'm like, what is wrong with you loser?
People are so bitter, but I get it because this money's on the line, and I think the Dogecoin and the GameStop shook out a lot of people from the market. Because I think that wiped people out.
It was brutal. I've seen like people are disappearing in droves off of like FinTwit. Like they're getting destroyed because it's a $400 stock. That's like it's 4 times Apple's price. Don't talk to me about market cap. These people have no clue what market cap is. But it's like they're just buying this stock in hopes that it goes like $100 higher. There's a limit on this stuff. Plus, you got to remember, there's also big money folks that are also playing this stock and taking advantage of this, and they're the ones who with the actual money. You've got someone in their basement buying 3 shares of GME, and then like he's yelling at the walls while you got this hedge fund dude who's actually putting like $1 million in GME, and that's why it went to 400. Then he sells it, and the guy in his basement screwed. He can never move out.
And no one knows about this, and no one talks about it. But people who short stocks also buy calls as a hedge. So
yes, exactly.
They made out okay. It's not, you didn't bankrupt. They planned for this. They manipulated everybody. I mean, they're the money makers for a reason.
Yeah.
Money managers. Yeah.
That's what I've been saying. Is like, if you really want to screw the suits, right? If you really want to get on there, if you really want to take a bite out of their wallet, it's like what Kathy Wood was saying earlier today in the Benzinga interview. Is like, Bitcoin or the crypto stocks, move your money out of a bank and put it into crypto. Again, it's very risky and volatile. I'm not a financial advisor. Don't listen to me. I'm an idiot. But like, that's one way to do it, is where you put your money into an asset where they can't really touch or make money. Once your money's in a bank, they're making interest off of it. They're playing with call options and stuff in the bank. But if you have it in crypto, it's really your money and it's moving around. And that's how you kind of take a bite out of the suits.
And you can make money from the crypto account, right? By like I don't have one, but
so Gemini, for example, gives you 3% interest rate on your crypto. I know there's another one, BlockFi, that gives you like 7%, but for us in New York, you can't use that one. You can use Gemini that gives you 3% interest, and that's pretty good. Most savings account, they only give you 1%. But then again, you also have to remember Bitcoin at any time. It's a volatile stock. I'm bullish on the crypto movement, but again, at any time it can crash. So it always be safe and play smart with the amount of money you put into any asset.
Yeah, don't put any more that would depress you if you lost, which I made that mistake at the beginning. I haven't put any more in since March, thank God. But
Are you a crypto guy too?
No, I don't know. I keep thinking it's not going to go up any higher, and then it does. I thought it was too high at 10,000, and now 40,000. But I'm too scared. I don't understand it. I understand stocks and the averages, and then Bitcoin is just like.
So let's do a quick lesson on Bitcoin. So there's only 21 million that ever exist in the world. 18.5 million have been mined and are in circulation right now. So Bitcoin is the only finite asset on the planet. Gold we can apparently get from space now, so that's not finite anymore. So that's what Elon Musk said, and took a huge swing at gold, and apparently it's true. I don't know. But the big thing about crypto is these big whales are now buying into it. You've got companies like Tesla are buying into it. You've got MicroStrategies buying into it. So essentially, the more people buy it and they move it to cold storage or into these places where it can't be touched or moved or sold, the value goes up because there's less Bitcoin that is actually available on the market to play around and trade with. So it's like basic supply and demand. If I've got 2 apples and each one costs $5, and then I sell one of them to producer Aaron, I can sell the next apple to Andrew for $10, $15, $20 because there's only like one left. That's just a basic example of it with how that works. So I personally, I periodically, like every 3 months, I put like a little bit into it, and it's very scary because you're kind of averaging up at this point every time. But it's like kind of like, for me, it's a hedge against inflation. It's a hedge against the markets, and I like the technology behind Bitcoin. I like the technology a lot more behind Ethereum, but that's a discussion for another day. But that's like a very, very fast 101 on crypto.
And I just want to add, Ryan, and not a lot of people know this, but there's a lot of coins out there, and it's all about the relative market value. So like you said, Bitcoin has a really limited market value. That's why it's so high. XRP has a huge pool of and Dogecoin is like unlimited. So
yeah, they just keep making more of it every few months.
Yeah, so it's like, buy Bitcoin if you want it, and just buy the percentages of Bitcoin, because that's a safer investment than buying some unknown coin like XRP that has too big of a float to make it go up, and it's very unreliable.
Yeah, so XRP, the cool thing about XRP is I really like that coin as well. It's mainly, I think eventually if it ever comes back and gets brought back in, it's good for transactions because it's like way faster than Bitcoin, and it's a lot clean energy based and all that stuff. So that one will probably be what the banks eventually end up using to kind of send money back and forth. Because right now, if I were to send like Andrew $200, my bank or his bank is fronting him the $200, and then in 3 to 5 days the money gets to him. But if we were to turn it into XRP and then I send him the XRP and then he turns the XRP back into $1, he literally has the money. It feels instantaneous. Bitcoin, it takes a little bit longer. Like usually the transactions take about like 20 to 25 to 30 minutes. But of course, that can happen as well. And then you have Litecoin, which is a little bit faster, so on and so forth. So all these coins are out there, but you're right. There's a lot of altcoins that are out there that people kind of fall for and buy and kind of do it. So the big one that's going around now is Cardano. I'm reading a little bit about it here and there. It's meant to be like a Ethereum killer or something. So just be careful. These coins, anyone can make a coin. Like we can have an Andrew coin tomorrow morning if we wanted to, and you can buy that.
And check the float too. So if there's a ton of coins out there and they make a ton, it's never going to go up. But Bitcoin's limited and it's legit, so it's a safer. Dude, I don't know. Oh, maybe XRP is limited eventually. I just know it has more coins out there.
Yeah, so XRP, what they did was they made like a bunch of them, and then they put like I think half of it into like a reserve that cannot be touched, and then periodically they release it into the ecosystem. That's why like it's a sub $1 coin, even though before everything was going on where it was when it's like regulations and SEC battles, it was pretty popular. It went from like 12 cents, like I think to a certain point 70 cents, and it was pretty cool. I mean, the tech behind that coin is really, really, really cool. But again, like you said, the float matters. If you're trying to buy an asset like want to treat it like gold, Bitcoin is probably your best alternative where the float is like fixed and locked and you literally can never make more Bitcoin.
Yeah. And if you look at XRP, you're like, oh, this is only 24 cents. What a deal. And then, but you factor in how many coins there are and the factor of how many coins there are in Bitcoin and how many coins there are in XRP, it's the same amount of price right now. So you're not getting a discount just because it's lower. You're getting a discount because it's diluted.
Yeah, that's where the whole market cap thing comes in. You take the amount of coin that's available, you multiply by the price, you get the market cap. Of course, Bitcoin's going to have a higher market cap because it's a more valuable thing. It's like your Apple to, for example, I don't know, what's a terrible technology company, Toshiba or whatever. Like I don't want to get sued by Toshiba now.
I don't think that is publicly traded, but
I hope not. They're probably on the OTC or something. And I've recently learned that Samsung is apparently on the OTC market. I had no clue that they had a stock.
Yeah, I tried to buy them at the beginning of the pandemic, and then you can only buy it if you live in Korea or South Korea. Yeah, they don't trade on the New York Stock Exchange, but they are like a weirdly family-owned place, and the owner apparently is dead, and they prop him up with sticks.
Really?
They're the CEO, yeah.
That's what everyone was saying about the CEO of Alibaba. They were like, where is he? We haven't seen him in like 3 months. Everyone thought he was dead, and then like one day he just randomly showed up like, hello.
And then the stock skyrocketed.
Yeah.
But he could have been a puppet. Who knows?
Yeah. A lookalike or something, but yeah. So what's your game plan going into tomorrow or into the rest of the week for stocks?
Well, I know the Fed's meeting in the morning. Sometimes people sell off in anticipation of that. So I'm hoping whoever the chairman is says something positive to boost up the stocks. I don't think the employment numbers are going to be that good because all the seasonal jobs ended. So I think that'll be bad. I really don't see any bright spot because I think the stimulus is also
doom and gloom, Schiavone.
But I don't think it's going to crash. But I don't think it's going to. I don't know. I have options that expire at the end of March, so I'm sweating. So I'm hoping for a pump to dump out of there, but which I should have did Monday, but I thought it was going to go up Tuesday as well.
Yeah, Monday felt like a bull trap now.
Yeah, it was. It was such a bull trap.
Wait, how much did the S&P finish up Monday? Like 2% or something?
Yeah, it was like 290.
2.5. Yeah, it was crazy.
Yeah, 390. Sorry, not 290.
And the NASDAQ was even higher, I think. It went up to 321.
Yeah, that's all the old people stocks. That's like Home Depot and all that crap.
The NASDAQ?
I think so. No, the Dow. I'm sorry, the Dow is all the old.
Oh, the Dow is old people stocks. Yeah, but I think that had a good week last week. So what I'm hoping for is the chairman Powell says he's going to give some more guidance that inflation is not going to go up. He's going to keep buying bonds.
Oh, Powell's speaking tomorrow? That's good.
Yeah, I think he's
speaking. It's usually a good thing.
I think he's speaking at 10, but I hope that pumps it up because I think that's why there was a big sell-off today because they didn't know what was going to happen.
The old people in stocks are saving me.
Sorry, what were you saying? I'm sorry. Everyone's scared that the interest rates are going to go up, even though like they've cemented like it's not going to go up until 2023. So everyone keeps getting freaked out every time this cycle comes around. Yeah, because everything else is pointing to the opposite direction. How oil is going up, how gold is, going up a little bit. Bitcoin's going up. Everything's pointing. The treasury yields are going up, so everything's pointing to inflation going up. So that's why everyone's really freaked out right now. And the treasury yield went up today too, which totally screwed the NASDAQ. But
people keep talking about that. I don't know. I mean, some people are arguing whether like the treasury yield should have that much effect on, stocks right now, and especially the growth stocks, they seem to affect more. So we've seen with like the PayPals and the Teslas and stuff, whenever the treasury yield goes up, those get hammered more than the market.
But if you look at the chart, the treasury yield was so low like this whole year, and then it starts ticking up out of nowhere. So people are like, it could go up even higher. And the market hates uncertainty, and that's I mean, if that's anything that I've learned from it, and it also doesn't like if everyone is certain about a certain thing, then that's when they pull the rug from you too. So the middle ground of knowing a little bit but not for sure is the perfect place to play the market.
Yeah,
which was all of January, and that big chunk between October and November was a great time to trade because no one was certain about what was going on, but no one was really thinking it was going to crash. And, people were a little bit certain that it was going to go up and they weren't positive it was going down. And I mean, that's why everyone sold off right before the election. That's why everyone sold off right before the beginning of the second quarter and all this stuff. It's because no one knows where the market's going. But now it seems to be pointing low, which is really freaking me out. But
we'll get through whatever's going on. We'll get through it. So I actually asked Foley this question last week, and he gave me a funny answer. So I'll ask you too. If you had like 10 grand right now and you could throw it into one stock, what would it be?
Probably. That's hard because I feel like all the value stocks are already up too high, but probably Carnival Cruise Lines. I mean, the vaccines are coming out. They're very streamlined. They got rid of all the old ships. They pay a great dividend. So in 4 years, that stock's probably going to be $100 and you're going to get dividends every year and you don't need to look at it.
That's true. That's a good answer. Foley said Wendy's, but that's Foley,
He was probably just hungry.
Yeah.
He was making me hungry too, talking about Wendy's.
I'm sorry, Ryan. Am I supposed to be funny or should I be giving joke answers? I feel like I'm too.
No, whatever you want, man. This is a conversation. You do you. This is meant to be like 100% relaxed, like laid back. This is meant you have no show needed.
Well, Ryan, when we started the show, one of the things that we talked about was we wanted to talk about our losses because we didn't think that was something that was done enough, and we know that if you're a trader, that's part of it, and it happens to everyone, and not a lot of people talk about, and we want to be open about it and how we get through it and how we. And it sucks sometimes. It's shitty sometimes, but it's part of trading.
Let's go around and talk about like our biggest losers this week. So I'll start. So okay. I'm down pretty hard in stock DPW, but again, I did my DD. I like the stock a lot. They have their Bitcoin mining rigs installed last week. They should be coming operational sometime this week, where it means we'll get a presser. It's got a baby float of like 27 million. Any press usually sets that stock off. They've been doing a lot of great investments in a lot of different energy companies. So it's got two nice catalysts coming up. So again, I've taken a hit on that one. It's a little bit disheartening, but I'm riding it through to see where I can go next with it. But again, it's shares, so I'm not dealing with options. So there's no time decay or anything that I'm worrying about. But I mean, I'm going to ride it through. I've got conviction in the play, but I mean, it's hard to watch a stock down pretty red. But you do what you got to do, and that's where the 30% dry powder comes in as you start averaging down, kind of ease the pain a little bit.
Yeah. You want to go ahead, Andrew? Or?
Sure. Yeah. So my big loser is eBay. I bought these call options for, I bought like a leg. So I bought like 61, 62, 63 strike price, expires tomorrow. I bought them 3 weeks ago thinking that the NASDAQ was just a dip. This thing was going to skyrocket and I was going to be a millionaire. And I went too hard in it. I'm such an idiot. And when they went down 50%, which is my stop loss, I was like, well, their ex-dividend date is the next day, so I'll just hold it because it might give it some volume. And that's when the NASDAQ crashed. So I lost everything. It's zero right now. My options are zero.
And they're not even expired yet?
No, I need a miracle. I literally need Jesus to come down, raise eBay and hold up an eBay sign and say, the word of the Lord is buy this stock, please. This useless stock I hate so much. Please buy this. Well, that's my only hope right now.
Yeah, not to say that's not going to happen, but the other night I saw a thing on TikTok where this kid was going through like a Ross dress for less and just scanning stuff there, finding out how much it was selling for on Amazon, and then selling the stuff on Amazon. So I guess you can sell stuff as like a person off Amazon now too, like eBay. So it's
I see those on TikTok all the time. Those are so dumb. You want your living to be going to Walmart and buying the clearance rack and reselling that? What if no one buys the stuff? Then you're stuck with a transformer with an extra leg. Like why
Plus
was it in the clearance rack?
The guy,
This is all Gary V's fault, by the way. This whole Marshall run, this is all Gary V's fault. He found like 2 really good things, made a video. Now everyone thinks they could be a Marshall's millionaire.
So dumb. And then now everyone's doing it. So you're going to go to the clearance rack. There's going to be even less options.
I know people are like, the Ross's was like one good thing that we had, that you could go there and get a pack of like Nike socks for $6 or whatever, like a real brand that you want, but it's so cheap. And now they're like, oh, that's going to be on Amazon. So.
Yeah. So my lesson, what'd you learn from your lesson? Did you learn anything from your losses, Ryan?
So I mean, I'm still holding them. So I guess I learned that maybe I scale into the play. So I guess I learned that maybe prepare a little bit better and maybe hedge some of my positions with, again, going back to discussing SPY puts. I've been looking into those. So I got to start hedging a lot of my positions in my portfolio with SPY puts, so that when SPY or anything starts crashing down, I can at least cash in some money and make some money on the side while that's going on, while my plays are hurting here. So I learned I got to start hedging a little bit better. I mean, I never had to hedge this far into it or this deep into it, because I just wait for the recovery or buy the dip and kind of scale it up, just because I don't usually buy like every crazy play that comes out. Most of my buys are long-term investments, and my swings are usually based on momentum and movement, and I got caught in a bad place. So I got to start hedging a little bit more now with everything going on with the volatility.
I do too. Yeah. And the hedging people are like, why am I going to lose money? You don't. You get a peace of mind. It's like buying car insurance. You know, like what do you spend on car insurance? $150. $150 can buy you a put, and that can save your whole portfolio if things go south. And I got to learn that lesson too, Ryan. But I'm just like, oh, why am I going to waste my money on a hedge? And then instead of losing $200 on the hedge, I'm down, thousands.
Yeah.
And I also learned stick to your stop loss, because I should have sold when it was at my stop loss, but I got stupid and I held, and that's why you always have a stop loss, because it gets worse. Everybody, it gets so much worse. Imagine what you could do with half of what you could have had, and then
because you can come back with capital when this whole thing shakes off. Yeah, stop loss is a good thing. It's based off of whatever the float is. So if it's like a lower float, I give myself a little bit more inch and way room. Even so, I'm still not at the point where I would have cut the position from a stop loss yet, but that's a great tip, is set a stop loss on a lot of these plays that you go into, and then worst case, you can adjust your stop loss as the market moves, or just pull out completely.
Exactly. Stick to your stop loss. And also what I learned is, hold on, I just lost my thought here. Okay, so we're talking about the stop loss. What I learned is, wait to buy the dip. Don't buy the dip the next day, because the chances are that's a slope that's going to keep going down. If you guys ever look at a chart, you see like sometimes the chart looks like a man with 2 big shoulders. That's a head and shoulders pattern. So sometimes stocks are headed all the way down to that right shoulder, and that's when you want to buy the dip. You don't want to buy when it just dips a little bit to the guy's ear, because you're going to lose the same amount of money you would have lost in the long term. So you want to.
We're down to the knees now, Schiavone.
We're
way past the shoulder.
We're down to the ankles. I mean, that's what I'm doing. I'm grabbing mine, but. So just wait, everybody. Have patience in the market, and stick to your plan. And I don't do any of this, by the way. I lose.
No, of course not.
I don't do any of
this. Yeah, some of the. I'm not a very technical trader, but a lot of some of the more technical traders that I've been learning from at Benzinga talk about that, is waiting to see signs of that turnaround before you kind of buy back into it. And yeah, if you bought right at the very bottom of the dip, your returns might be a little bit higher than if you waited till it went up a little bit. But what's a couple percent if you wait for that to turn around, then you buy in and get that 10%, that you're looking for, whatever percent gain you're looking for.
Yeah, you can't be cheap in this market. Like, if you can't be worried about 2%, 1% in this market. Right. Yeah. You got to look at the big picture, everybody. You guys are going to live a long time. Don't trade day by day. I mean, hopefully you are. I don't know if you're drinking how much Mountain Dew you drink, Ryan, but just be patient, everybody. And no, even if you're down a lot, just wait for. That's what I did when I was down to $300 from 10,000. I was like, I'm gonna step away from the table. I I went full tilt. That's how I got down that low.
Uh-oh.
And I'm going to wait for a clear direction. And then I waited for that clear direction. And that's when I started making my money back. So I would wait, everybody, and wait for that clear direction right now, because I don't know where it's going. But if you guys look at the big chart, it looks like another Head and Shoulders is forming on the NASDAQ. So we could go down to where we were in October. And that's when you want to buy NASDAQ, because I don't think NASDAQ stocks aren't going anywhere. They're the future. So just keep that in mind.
That's true. Yeah. What about you, Aaron? Now, how about you? How about your losses and what you learned from?
So this week, I'd probably say my biggest loss also is in options, like Andrew. It's actually a long dated call option I have, and I don't really do that often, but I dropped some coin on this one and went expensive and bought a year out the money call on Run. Ticker's Run. It's Sunrun, the company is, and they're supposed to be like the leader of solar panel residential. And my thesis on it was like, you drive around, everyone's building houses right now, everyone's doing construction, and apparently in every region where solar, Arizona, Texas, all the houses being built there, Sunrun is putting solar panels in a lot of them. So basically the thought was, from now into a year, the stock should grow a little bit. However, in the short term, the stock has dropped about 10-15%, and my call option that I bought for like $2,000 is worth about half of that in like a week. So,
oh wow,
yeah, I mean, it's not great, but honestly, yeah, I did buy some
common shares.
I did buy some common shares of the stock after it dipped, so that'll be kind of like a hedge on it. But if it continues to fall, then it's the opposite of a hedge.
Yeah.
Well, that makes me feel good hearing about your loss, man. That's
what we're here for. That's what we're here for, Andrew. Come on.
Yeah,
we're all bleeding, buddy.
Makes me feel warm and toasty. Did anyone have a winner this week?
I don't know.
Rocket, actually, I've held.
Really? You were in on that, Ryan?
Yeah, I've had Rocket for a while. It's been a real stinker in my portfolio for a while. I bought it at 27. It's been in the 20s for a while, and then I woke up one morning and apparently the Wall Street bets guys are like, "We're gonna play with this Rocket stock." It's all right. So I was like in at 27, out at 43. I still have some shares left because I still like it long term. But I was like, tomorrow this thing's gonna come crashing down. I'm just gonna get rid of most of it today. Not yesterday, the day before yesterday, or whenever the squeeze was. I got rid of most of that. It was yesterday. I got rid of most of it yesterday. Kept some of it still for the long run. But I do think that the thing with that play is it's when the ex-dividend date hits, when they do like their special $1 dividend on, I think March 8th, I think it is. Like right after that, it's going to come bouncing back down to 20, because that's how these ex-dividend things work. It's like I got stuck in that with Costco. It screwed me big time.
Yeah, man, me too. And then you never know what's going to happen. I mean, even when the ex-dividend happens, you think like, I'm going to buy a put, and then it's super green day on the SPY, and that pulls up.
Something happens.
Yeah, it's so stupid how this market sucks. It's just sucks. I can't get out of it. But Ryan, what you were saying about Rocket, that's awesome. And it's awesome you got out. And that's a lesson that I learned the hard way, taking the profits out, because once the thing skyrockets, it's likely not going to go any higher, and green is green. Take that money and enjoy your life. Don't wait for it to go higher, because it's going to crash like really happened with Rocket.
Yeah, so many people are like, Rocket's going to like 50, 60, 70, 100. It never goes up that high. It never goes up that high.
Been sitting like crap since it IPO'd.
GameStop had never gone to $400 a share.
Yeah, but that one you had a militia behind that one. This is Rocket. It was like 30 people were in that one.
Rocket doesn't have the same like brand record. I've made this case before, but basically how the average age of someone on Wall Street bets is going to be, 26, 27, 28 years old. That whole crowd grows up going to GameStop, getting games. They don't want to see GameStop go out of business. So it's not just like any company that has a short float like that. It's got to have the brand recognition. It's got to have the militia behind it, if you want to call it. So yeah, that was
I've seen Wall Street bets get pumped up about Palantir. I mean, has anyone? Do they even know what that is?
That's a good point.
They don't know. They don't care about.
And no one knows what Palantir does. That's the whole point. You're like investing in this. It's like the public version of the CIA.
You're not supposed to know what it is.
You're
not supposed to know what it is. Have you looked at their investor I tried to so I make these DD videos and I like to use the investor presentations to do it. I'm looking through this investor presentation. I'm like, I can't make heads or tails out of this thing. It's so confusing.
Yeah, it's just info. They sell people's info, right? Is that what they do?
Yeah,
probably.
Pretty much, it's like they take the data.
They're probably selling your location service right now.
Probably.
Hello.
And their name is an evil thing from Lord of the Rings. That was that globe that like kills people and Sauron talks to.
We should make a company called like the Death Star and try to bring it public. And then,
IPO that.
Yeah.
IPO Death Star on the NASDAQ.
DSTR could be the ticker. I'm seeing it now.
We gotta get the
right.
SPAC so these people buy in. They like SPACs.
Oh
Yeah,
my
the logo
God.
is just literally a skeleton, and people are like, "All right,
Yeah.
this looks
Sure.
cheery."
Back.
The CEO of Palantir looks like an evil genius too. He's got the hair. Have you seen him with the white hair? He looks like an evil genius.
You have to be evil to run that company. I mean, that's an evil company. He probably is Sauron from Lord of the Rings. That's probably him.
Oh God, we're gonna get sued for this one.
Oh my God.
I hope not by them. I don't even think they would need to sue us. They could probably just get rid of us.
One of them is gonna show up from behind this curtain and just take me out.
They're gonna ruin our lives somehow. They're gonna freeze our accounts.
Schiavone, watch out behind you.
Ah!
But the stock is great though.
I like the stock long term too. I own some shares. It's
No,
part of
yeah.
Death Star, I guess.
Yeah.
Yeah.
There's all this like people talking about moral compromise of like investing in it. And it's like, yeah, I don't really want to invest in that company, but you can't deny the stock's been a great stock so far over the past year, however long.
Yeah, it's been doing good.
But every time Wall Street Bets gets excited about something, I kind of like get leery of it. If I like a stock and Wall Street Bets doesn't mention it, I'm like, I think I got something here. You know.
Interesting.
Because what happens with them is they influx. They come in, they run up the price so fast. Like, for example, Bed Bath & Beyond. I bought that stock like 3 weeks before the whole craziness happened because I was like, Bed Bath & Beyond, they've got $1 billion on the balance sheet. They're restructuring the company. They've got new management. It's going to do good long term. I come in and I wake up 2 days later. I see freaking Bed Bath & Beyond is like $50. I'm like, this should have happened like 3 years from now. What's going on? It makes no sense. I know.
But that's when you sell because the money managers, those mystery people, evil people who run the market are like, all these idiots have it. Let's dump it because we have way more shares than anyone on Wall Street Bets combined. So we'll sell it all. We'll take their money, and we'll just stay rich. And everyone else.
And then they'll buy when it dips because they know when the dips are coming, and they'll buy it, and then that'll be the true bottom because they're buying like millions of shares, so they get to shoot it right back up.
Yeah, and then the Wall Street Bets guy who held it at 50 is like, I guess I can sell now at 40.
Like, I'm still taking my, whatever.
It's brutal, man. I hate it. I hate every second of it. It's there's forces out of
what do you
control.
do to cope with the stress stuff? Because like I know on the Panic Attacking podcast you talk about like stress balls. Is there something like you could recommend to people that are watching now? Because you've got so much direct contact with like dealing with stress and dealing with how to like cope with it.
So you get used to it after a while. So now, like a day like today, I would be sweaty. I'd be up all night staring at the futures, and you have to keep in mind that no matter where you can't do anything to change it. Just keep that in mind. You looking at the futures at 2 a.m. isn't going to make the market go up or down, and you can't do anything either. I don't know if you guys do that, but sometimes if I have a really bad day and I'm over leveraged, I will stay up all night. I'll see what my stock's trading at in Europe. I think Frankfurt opens at 2 a.m. or in our time, so I'll check it out. I'll be like, oh my God.
Does it usually track pretty well? Like if it's trading well and people are buying a bunch of it in Germany, then is it gonna?
No, it doesn't. But I just want an answer, so I'm like,
searching for something.
Yeah, everyone waits for America to open up, I feel like, but it doesn't matter. Nothing you do at night will affect your stock. So I would read and go to sleep and, just stay off your phone, keep your phone in a different room. Don't even attempt to look at your phone. And that's been helping me because, like I said, I would be up all night for weeks at a time looking at how's the Japan index doing? How's China? Because they're up when we're asleep. So, and then sometimes I'll look at something, it'll be negative 2% in the future. Like the SPY will be down 2%. I'll be like, all right, it's going to be red tomorrow. I have puts, thank God. And then I'll wake up at 8:30 and it's positive 2%. And I'm like, why did I spend all that time looking at futures? It doesn't do anything.
Yeah, futures can be manipulated. There's a video of Jim Cramer that's on the internet. He's like, yeah, all these hedge funds, we just manipulate the futures and make so much money because people trade futures too. Like I have no idea how that works, but they trade futures. I don't trust futures for crap. Like last night, the futures were green. Everyone was ready to go.
Yes.
We wake up to a bloodbath today. It's like,
yes,
exactly. What the hell? What's the point of this thing? It doesn't work.
And there's no point. And that's what I'm trying to tell. Yeah, don't.
It's like the polls for the elections. They're all bullshit.
It's all bull crap. And you never know what's going to happen. And the futures are, it's just like rolling chicken bones and being like, is the traffic light going to turn red now? Let's roll the chicken bones. And then if they roll a certain way and it turns green, you're like, I'm right. You know, like they're right certain amount of times, but that doesn't mean it's a guarantee. And man, the futures trade like a stock. So sometimes a stock will, the S&P will complete a pattern in the futures and then be completely different when market opens because it already completed a head and shoulders or a cup and handle or whatever. They did it all while we're sleeping. So
So Andrew, you like getting into the technicals, it sounds like.
Well, because I have mental problems, anxiety, so I need answers.
You need something to look at, yeah. I hear you. When I actually,
Jerome, do you check Webull at 4 a.m. too to see where the stocks are going?
Oh, when the pre-market opens, that's even worse because that's not even because a lot of my times a thing is skyrocketing at 4 a.m. and then at 9:30,
and you can't touch it because you're an options trader,
right? Yeah, and then 9:30 it's blood red. Like it doesn't. I'll get excited at 4 a.m. and then I'll go to sleep. Or I'll see a stock I like is blood red at 4 a.m. and I'll stay up all morning trying to hoping it'll go up. But that's me. I'm psycho. What were you saying, producer?
So kind of like some backstory. I've been kind of interested in well, not really interested in investing growing up, but like my dad did it, my family, you know, whatever. So I had limited knowledge. But about a year ago, right when COVID hit. That's when I really got into it. But really before the market crashed, I actually was on the, you know, like buying puts and stuff because a couple of friends and I were like talking about what was going on in Europe and stuff and just saying how silly it was, how no stocks had like started going down in America when like shit was shutting down. A company's factory would be shut down in China and the stock hadn't dropped at all. And it was like, they're literally not producing the product that this company produces and the stock hasn't moved. Like it didn't make sense. And we, bought some puts, and I really like to talk about it now because I realize now that I've been investing for the past year, like everyone hates short sellers and everyone hates bears, you know. So, but made a lot of money in like a week trading these puts. Like literally turned like $800 in my Robinhood to like 15 grand, and then lost that all the next 2 weeks. Like literally lost that whole 15 grand in the next following 2 weeks. Like because I stayed short stuff, and someone asked earlier. No, Google's been asking really good questions in the comments. Asked like, what did you learn from those losses? And that's what I learned is I went up 15 grand in a week or whatever, and I literally didn't change. Like I stayed short on all these companies that I'd already shorted and already made my money on. And if I just would have taken that money and turned it long or whatever, it'd be worth, you know, however much today. So I've learned a lot since then.
Yeah, but you never know. I mean, some people bought puts at that bottom too. They probably paid like, you know, whatever, 15 grand worth of puts at that bottom and lost it all too. So at least you only
that
lost.
Was me. That's what I did.
No, you turned 800 to 15,000. I thought.
Yeah, and then lost the 15 grand. Staying short. I kept buying more. Yeah.
Well, that's what I mean. It's not like you got in at the bottom.
Yeah. Oh, yeah. I didn't enter that. Yeah, I didn't lose 15 grand. I lost 15 grand of house money. Yeah.
Yeah, exactly. So you got to look at it that way, and you learn the lesson of once something crashes a lot, and it all crashed because no one knew what was happening. This had never happened before in 100 years. So no one knew if the stocks would ever come back. And then now we know what goes on. So it's not going to dip like it was in March.
Do we really know what goes on though? This happens every time. We're still running around like headless chickens every time the market goes down.
That's true.
I know, yeah, but I don't think it's going to go down to that level. Unless
you I mean, you can learn having some SPY puts hedging or having cash on hand so you can buy dips. Like those are things that like concrete ways that when this happens, you can learn from those past mistakes. Then if you know, I think about like obviously, you know, only invest with money that you can afford losing, you know. So it's like, well, I mean, I guess you're going to invest in bonds and be safe or whatever, but I'm talking about like trading options the way I do and stuff. I don't do it with money that I'm not okay with losing. So you got to be able to learn from those mistakes, and that's really what it's about.
And you have to look at it like this way, you know, like, of course, don't put any more money than you want to lose. But would an extra 13 grand change your whole life? Like, you can't buy a house.
I wouldn't mind an extra 13 grand.
Yeah,
right now.
Sounds pretty good right now.
what would you guys do with it? You can't buy a house. You can't pay off all your student loans with 13 grand.
No.
You're gonna have to pay taxes on it. It's gonna be more, like.
Well, yeah, I mean, it was greedy on my part, and greed is greed. And like we talk about, like those guys, the people that traded GameStop and stuff. We had this one guy on one of our streams one day that was saying, he's like, I have diamond hands. He's like, I'm not selling if GameStop goes to 500, not if it goes to 1,000, not if it goes to 1,500. And it's just like, I was thinking in my head, like, how is that any different than the hedge funds getting greedy, shorting GameStop till there was no more short? It's like the same thing. So it's like, once you make that 100% gain or whatever, like, get out, otherwise you're just doing it to, I don't even know what the point of trying to, hang on to a stock once you've made your whatever percent.
That's what I didn't understand with the GameStop thing is like, well, that whole thing, obviously it hurt the overall market and created that 2-week red ricochet that we dealt with. And then the rocket thing is what hurt today's market, but not too bad. But it's like, what is all of Wall Street bets going to do? Are they going to hold the stock forever and just keep keep GameStop at 500? Then GameStop is going to come around doing a public offering, and then the stock is going to go down. They'll do $1 billion public offering, cut the float and double the float, and then it's like destroy the stock that you're holding just on there. And they're like, all right, you're not going to sell. Cool, we'll sell for you. It's like,
yeah.
Oh my God. It was just last night. Actually, I was thinking about how we were having Kathy Wood on today, and I was trying to explain the difference between, this is kind of off topic, but I was trying to explain the difference between an ETF and a mutual fund. Mm-hmm. And I was just going, because my mom, I had no, I was trying to explain it to my mom, the difference, and she just could not get it. And it was the most frustrating thing. And that was, I don't know how we got there when I started, I had a thought that was connected, and then it went to that. So I apologize for that.
No, it's cool. Maybe was it like people have no clue how the other outstanding factors are? They just look at like one or two factors of a stock, like the price and the movement, and just go based off of that and completely ignore everything else?
Yeah. Well, I was also going to say, I mean, because you were talking about how GameStop, that whole craziness kind of brought the market down. And I look back on it and it was crazy and stuff, but it was also it was fun as hell. I mean, everyone was talking about investing. Oh, that's how I got there. It's because I was going to talk. I would be sitting down at dinner with my, and my mom would be like, "What's going on with GameStop?" And I'd be like, "My mom's trying to talk to me about stocks at dinner right now." It was just the most crazy thing that everyone was talking about stocks, and it was fun for a couple of days. Even though I personally wasn't in GameStop, I did make some money. I bought some AMC calls. I bought calls on AMC, and I made a bunch of money on that. And it was funny because I got to a point where I was the same way, where I see Reddit and all these stuff pumping up these stocks, and I'm like, oh, I don't want to touch it. I got to the point where I was just like, well, I saw GameStop moving. I was like, you can't beat them, join them. So I'm talking about AMC, bought $10 calls on AMC when it was at $4 and it goes up to 16. And I sold them. Unlike some people that were probably still buying AMC thinking it's getting short squeezed to 100.
You have no idea the amount of DMs because I have my DMs open. So people get worried or don't feel comfortable asking questions publicly. They're like, all right, you can DM me and I'll try to answer your question as fast as I can. And man, dude, people were just they wouldn't give up. They were like, GameStop was back to 40 and they're like, all right, we're still buying GameStop. You think it's going to go to 100? I was like, I have no clue how that stock operates. It makes zero sense. We got a super chat, by the way.
Yeah, I was going to say, I got to put this up. I hear if you short a stock and it goes all the way to zero, you don't pay taxes on your profit. And that's why they were still shorting it. Thoughts?
I don't think that's how that works.
They have the puts because they shorts because they think it's going to go bankrupt, and when it goes bankrupt, the people who short it and the people who own the puts get paid out at a huge so it goes from 0 to 5. If they bought the $5 puts, they get paid.
But maybe the payout is not taxed the same as capital gains. I'm not sure.
What he's talking about is if you do the hedge with the put, right? So let's say you make $1 million in puts, right? And then you're shorting the stock and the stock goes to zero and you have to cover that short. Since it's technically a loss, you can write that loss off and it kind of should outweigh your puts if you balanced your hedge properly so that it goes either way. So I guess so, but I mean, I don't know much about tax.
Either way, it doesn't sound like we have a definitive answer. So if you want your $4.99 back, let me know. You can email me at powerhour@benzinga.com. I'll Venmo you. Or if you want us to keep it, I'll Venmo Ryan and Andrew $2.50 because
it's completely
I guarantee you, Sebastian, there is no tax loophole to the only tax loophole is if you don't win anything. So if you break even, you don't have to pay taxes because you're at zero. And if you lose money, you can write off a little bit. I think there's a cap, but That's it. If you're shorting a stock and you make money, the IRS is going to get money somehow.
I do have some tax loopholes. Have you worked from home at all this year? You can write your Wi-Fi off as a work expense. You can write your computer off as a work. You can write your mortgage off as a I don't even know what I'm saying, but it's their tax expense or their work expenses on your tax if you've been working from home. I learned that the other day.
I'm doing it then. I pay Wi-Fi.
Have you been working? Exactly. You should look into that. You should look into that. See if you've been working from home. Your rent, your Wi-Fi, everything is a work expense technically.
I'm into that. Okay. Well, that makes me feel better. And also, you can write off all your Robinhood losses.
Yeah, you can. Yeah, that's why you see like in December, you'll see like a lot of sell-offs and a lot of stocks. That's like tax loss harvesting. So like all the stocks that people are like bag holding, they tend to like cut those and sell them off. So it kind of outweighs the gain. So like if you made like $10,000 in gains and you've got like $2,000 in losses, you'll only be taxed on $8,000 because you can write that $2,000 off. But like Andrew said, there's a cap on that. So don't go losing millions of dollars to try to like write that off. You'll get screwed.
Yeah, I think the cap is $1,500 over the course of 3 years or something. Like we can only write off $1,500. I don't know. I think it's something like that.
Yeah, I well, actually, speaking of tax, I was super surprised. I got a thing on my Robinhood for like crypto trading. I was like, I thought the whole point of crypto trading was that it was like, you're not paying tax, whatever. And it's like, whatever.
I don't know, man. They're going to tax everything.
And then one more thing, producer and Ryan and everyone listening, I wouldn't use Robinhood for crypto because they don't pay the interest, right? They don't pay you.
No, they don't pay the interest, and you're not really holding the crypto. It's not a crypto wallet. Like you can't use it to buy and sell stuff. It's just it's like fake money. It's like it's really, really bad.
Yeah, we should just make a new show where I say something and Andrew says, and by the way, you shouldn't do this, audience. We talk about everything.
Producer, you're losing money, man. You should go to a real crypto wallet.
No, I know, and it actually is terrible. And I actually was going to I'm not going to speak ill on Robin. Well, I mean, I don't know. But either way, I was going to pull some money out of there. But I will say the one thing about Robinhood is it makes it very easy to buy crypto and trade stocks on the same app. However, when you are buying Bitcoin and stuff on Robinhood, it's not like when you're actually buying Bitcoin. It doesn't go to a virtual wallet or anything. It's only on Robinhood, and you can just sell it back to Robinhood. So you're not even really owning the Bitcoin. You're just buying it like basically as a stock.
Yeah, you're like leasing it.
And so it's again, I don't recommend a lot of things that I do, especially that's one of them. So
cool.
Before we wrap up, someone keeps like asking the question. Keep asking like, what do we think about Tesla in the chat? I like Tesla long. That's just my short answer on it. What do you guys think about Tesla?
It's one of those things. I stay away. I have no idea what's going on with it, so I don't know, and no one does. I mean,
we had a guy. We had a Raz report. Our CEO Jason Raznick had one with Gene Munster a month or so ago, and he was like, he got like famous basically being like a big Apple bull before Apple got big, and then he did the same thing with Tesla. So he's had like two big conviction plays where he's basically made a bunch of money off Tesla and Apple, and also been an analyst. Well, I don't even know if he made money off them because he was an analyst, but either way, he was big bull on them both. And he said Tesla, if you're asking me about Tesla in the next year, maybe not. But if you're asking me about Tesla from now to 10 years down the road, like, yeah. So basically saying like he would buy Tesla if he could hold on to that stock for 10 years, but not if he had to buy it and sell it within a year. So
I agree. And I'm going to use that answer to plug the Kathy Wood interview because she actually talked about Tesla a little bit.
Oh, there you go.
So whoever's watching that, go ahead and check out the Kathy Wood interview with Jason Raznick. It was awesome. They covered Tesla. They covered Zoom. They covered Roku, a lot of the big stocks that people like to play, especially in options. So definitely go and check that out. And if you haven't already subscribed to the network, there's a lot of great videos that come out. We talk about a lot of different stuff. We've got the after hour. Tomorrow, I think at 5, I'm doing another thing on here where we're just talking straight stocks. So if you want to go ahead and subscribe, and that like button is free, by the way. If you guys want to smash it, you don't have to do what Sebastian did with donating money. You can just smash that like button. It helps the algorithm out a lot. So Andrew, buddy, thank you so much for coming on. Where can they find you on the good old internet?
So Andrew Schiavone, my name on Instagram and on TikTok. If you want to see my joke stock videos, and I put stand up on there. Schiavone on Twitter. Me and Ryan
I'm
go
gonna try
back
to
and forth
grab
on Twitter
those
a lot.
for you.
So just my first initial and my last name, and my website is just my name .com. And Panic Attacking Podcast is on Instagram, iTunes. We just got on YouTube, so I don't know if I can drop a link anywhere, but we don't have 50 subscribers yet, so I didn't customize it.
Oh, you should come on. You should come on our stream on Benzinga stream more, and we'll plug your YouTube channel, get you some subscribers.
I'd love that. I just need 50 so I could change the time. Right now, my thing's like gobbledygook. My thing's
Hold on. Let me get the link. We'll get you 50 subscribers.
Yeah,
What
we've
was
got
the username
150.
again?
We've got 150 people in here. I bet we can get.
What was
3.
the username? You said Panic Attacking, right? Panic Attacking.
Yeah. So,
Guys, we're on a mission. We're gonna get Andrew Schiavone to 50 so he can fix his goobly.
Yeah. So I'm at 39 now. I'll send it to you.
We're gonna crush you.
I sent it to you, Ryan. Let me know if this opens up.
Here we go. Yeah. Panic. Oh, it says Panic Attack Pod. What are you saying? It doesn't. What'd you say the name was?
No. Yeah, but if you look at the bar, it just has gobbledygook. Like the browser.
The URL.
Yeah.
So you can't change that until you get a certain amount of subscribers.
Yeah, and it's harder to find on Google and stuff.
But you just want to be youtube.com/Panic Attack.
Yeah, Panic Attacking, right? So yeah, right now, it's just it's what I see when I see my stocks are down when I have a seizure. It's just a bunch of random numbers and letters and stuff.
Well, there we go.
So
I put it in there.
We just need 10 more. It's up to 40 now, so if we can get 10 more people.
Oh, here, I'll do it. I'll subscribe.
Wow, thanks guys. Thanks so much. Yeah, we just started paying an editor to edit the videos, so I'm gonna hide actually the old ones.
You should start paying subscribers, then maybe you'll get 50 a lot quicker.
All right. Well, if I had a freaking green day, I could.
Man, thank you so much for coming on. So Andrew Schiavone, Schiavone on Twitter, right? And then
I posted the Twitter. I posted the Twitter link in the chat. So go check it out. Hit the follow. Give him a follow. Give my man Andrew a follow. Thank you for coming on.
Thanks, guys. You guys are awesome. Thanks so much for having the time. And I really don't have the ability to talk a lot of people about stocks that get it as much as you guys do. So that's really cool.
Oh, well, hey, before you go then, I gotta get a confirmed answer. So you want to come back on a Benzinga stream again sometime? We've got a lot of different shows.
Yeah, dude, I'm down.
All right, we have a Get Technical show I think you'd be good on because it seemed like you like to talk about the different I don't even know the phrase, like technical terms as far as the head and shoulders, high flags, like that stuff. We have a whole show.
Neil, I think they'll have fun.
Neil's great, and Neil's basically a comedian. He just didn't choose that path.
Great. I'd love to talk to Neil about everything that drives me insane.
Yeah, exactly.
Thanks so much, guys. I had a blast.
Right, man.
Yeah, thank you, Andrew.
Much, have a good one.
You too, man. See you later.
See you later.
All right.
Okay, man. That was fun. That was a lot of fun. That flew by.
Yeah, it really did. We've actually gone like 17 minutes over right now. Hour 17. We started. He kind of sounds like Neil. That's what I know. I was thinking that too, almost. Not necessarily his voice, but just his kind of how he carried himself. So that's why that popped in my head that they would do well together. Yeah, Ryan, thank you again for joining me tonight.
For sure. Thank you, man. I mean, I feel a lot better after today and after these past few red days. I feel a lot better. I hope we had a lot of people in the chat and watching the video, so I hope they feel a lot better too. But yeah, we're all essentially at the end of the day, we're all in this together. We're gonna get through it together, and we're gonna keep going and making some coin eventually, and we'll see where the world goes in it. You can find me on Twitter at Ryan Rozbiani, and I'm also on YouTube at Ryan. Someone's saying, is Ryan the guy that codes for Benzinga Pro? No, that's not me.
Different Ryan. Ryan. Both Ryans are great though. They really are.
Thank you. Appreciate it.
All right, y'all.
Aaron,
we'll have a great night. Wait, what were you saying, Ryan? I don't want to cut you off.
I said, where can they find you? You forgot to plug yourself.
Oh man. Well, someone asked me my Instagram. I plugged that, but my Instagram's not very active. If you follow me there, you might not be very pleased. I don't think I've posted in a year or so. Here's my Twitter. Your Ryan is better? I doubt it. We've got two Ryans. All right, man. Well, same time. Well, actually, not same time next week, because next week we'll be on time. We'll be at 8 p.m.
For sure. We'll have everyone back, so subscribe if you haven't. See you guys next week. Thank you so much, and bye-bye.
Bye-bye.